Alright, hello everyone, it's Acro. Today we're gonna answer one simple question. Where is Bitcoin most likely to bottom in terms of price? And to figure it out, we'll be taking a look at a lot of different tools that have historically marked the previous bottoms, as well as some very interesting patterns that no one is talking about. And at the end, we'll see how everything seems to line up for this zone here to be the bottom of the bear market. So make sure to watch until the very end to find out where this is and where the probabilities are the highest. Also, we'll go step by step, so it will be a bit slow in the beginning, but make sure to watch everything because it will all make sense in the end. Alright, so let's start on the monthly time frame and see for each past cycle how much the bear markets retraced compared to their respective bull market. So to measure a retracement, we simply measure from the bottom of a cycle up to the top, and we check if we hit any interesting Fibonacci level at the bottom of the bear market. And here in 2018, you can see we perfectly bounced off the 382. Which is pretty common for corrections of strong trends. So let's keep it on the charts. And let's look at the third cycle. So here from the bottom to the top once again, you can see that this time we went straight through the 382 level and almost hit the 0.5, but not quite. But what's interesting is that instead of taking the bear market low, when you take the COVID low, which is a valid pivot, we actually hit the 0.5. So let's remove the 382. So you can see that in the past previous two bear markets, the bottom was exactly on a precise Fibonacci level. So let's check out what we have in the current bear market. And it's very interesting because we got quite close to the 382 level, but we have not hit it yet. It's at 56,900. And it's possible for a major level like that to be front run a little bit, but often these levels, they tend to be hit. You can see the 0.5 is at 44k and it seems quite low compared to where we are right now and how much time has passed in the current cycle to reach down there, even though it's possible. But it seems like we're missing just a little bit of downside to reach this 382 level. And something else that's quite interesting is that with retracements, you don't have to measure from the last pivot low. You can actually look even before. So for example, if I measure from the low of 2015 to the top of 2021, we've got the 236 level that is almost perfectly aligned with the 0.5 we've measured just before. And price often reacts when the levels are aligned like this on the chart, simply because different people looking at different things are in fact looking at the same level on the chart, and this can create a strong support. Alright, so now we can apply the same logic to the current bear market. So instead of measuring from the 2022 low, let's measure from the last pivot low, which was during COVID in 2020, and up to the top. And now once again, it's the 236 level that is almost perfectly aligned with the 382 we measured just before. And to be precise, it's at 55,600. And once again, you can see we have not touched this level yet. Right, so let's hide the retracements for now and look at another very interesting pattern that marked each bear market bottom so far. And it has to do with the extension tool. So if you're not aware, the extension is simply measuring how much the second part of a move declined compared to the first part. So here, for example, a 1-to-1 simply means that the first part of the move declined exactly as much as the second part of the move, which is 72%. And the 1-to-1 is a very strong level because when we get a bullish trend, price often likes to create two symmetrical moves to the downside before we get the continuation higher. And you can see how well it was respected over time. But you can notice that each time we went slightly below, right? Once again here, slightly below and slightly below in 2018. However, in 2022, it was quite different. We went straight through the 1-to-1 level and we actually bottomed exactly at the next Fibonacci level, which is the 1.618. And bear in mind that it aligns also with the macro retracements we've seen before. So now let's take a look at what the extensions look like so far in the current cycle. So when we measure from the top to the first retracement down to the top again, you can see that the 1-to-1 is at 62,400. And very similarly to previous bear markets, we went just slightly below. And so far it has been an excellent support. And it's actually one of the strongest arguments of why we might have already bottomed, which is that we very often don't go far below the 1-to-1 level. And right now it seems like we are bouncing off of it. That's a very compelling case for why the bottom might be in, but as we've seen before, we are still not quite yet hitting the relevant retracement levels. And actually, if we want to get an even better idea of where we might bottom, it's worth looking at something I call the connecting lines. So when we go over the previous bear markets, the connecting lines are simply connecting the top of a cycle and the bottom of the bear market. So there they are for the 3 past cycles. And what we can do is simply apply them to the current top. And we get the following lines. So bear in mind that here the scaling is respected and it shows how deep the previous declines have been. And here you get a clear picture of if we have bottomed, then it's a lot different from what happened in previous cycles, both in terms of price as well as time. And by the way, if you're interested in when is the most likely place for Bitcoin to bottom this cycle, I've made another video where I go over the details of what is the most likely timing window for this bear market bottom. So make sure to watch that video first and then come back to this video. So here's what the 2026 connecting line looks like if we have bottomed for this cycle. But actually there's a very powerful pattern that happened in previous bear markets. And when applied to the current bear market, we will see how this connecting line is not very convincing. And by analyzing previous bear markets, we'll even get a sense of where exactly the bottom of the bear market might be. So to do that, we'll go over each past bear market one by one and on the daily time frame to get more precise data. And as you'll see, in bear markets, we usually tend to spend some time in the beginning below the connecting line and then break above and spend the rest of the bear market above this line. But the very interesting pattern is that we get a very precise touch of the connecting line during the bear market. So here in 2014, we only got this one here, and you could argue this one, although it did not touch it exactly. Now let's go over 2018. And here it's a lot more interesting. We get a perfect touch here and a perfect support here. And once again here right before the end twice. And we take a look at 2022, we once again have very strong reactions at this very specific line as a resistance level multiple times, as a support level. So what history tells us is that so far, every time we had a bottom, the line that connects the top and the bottom produces very strong reactions when price gets around it. So with this knowledge, let's go into the current cycle, hide the previous connecting lines, and look at what we have so far. So if we have bottomed, then this is how the line looks like. And we get a similar pattern where we first are below the line and then get above it. And you can see how there are some interesting touches here, but they're not very precise. And there's very few of them. That's why this connecting line doesn't look very convincing compared to what we've seen in past cycles. So let's try to find out what's the best looking one. The first one that comes to mind is this one, because we get a touch here and here. However, it means we would have to drop significantly lower than we are today. And as we've seen with the prior retracements, if I put them on the chart, it would actually coincide kind of with the 0.5, but it's a lot lower, and as we've seen, it will make more sense to bottom somewhere in this neighborhood of 55 to 57K. So the next obvious connecting line would be to connect this top here. And something very interesting appears where we get a touch here, as well as some support here and some resistance with the most recent tops. And not only that, but it also falls right into our retracement levels. And it really seems like the most convincing connecting line that we have for 2026. And if we respect this pattern we've seen in previous bear markets, then the bottom should be somewhere along this line. So from everything we've seen so far, it really seems like this area here looks like a very good candidate for the bear market bottom. And there's even one more tool that aligns with this area quite well. So for that, let's hide everything. Let's go back on the weekly time frame. And the tool I'm talking about is a pitchfork. And when drawn correctly, they can be very effective at predicting where price might bounce from. So here it's a major pitchfork because it has been drawn from last cycle's pivot points, which is the bull market bottom, the bull market top, and the bear market bottom. And the relevance of a pitchfork often comes down to how well the median line here in red is respected over time. And here you can see how perfect the touches have been so far over here in 2024 as resistance, as support. And very recently in May, we got rejected exactly at this median line. That already tells us that this pitchfork is valid. And not only that, but Here in the settings, I have the 618 enabled, which are the yellow lines here. And you can tell how extremely impressive they have been so far in terms of support and resistance, because keep in mind that the pitchfork has been drawn in November 2022. So you can see here the touches of support on the 618 and the multiple places where we got resistance and actually marked the top of the bull market. So like I mentioned, very recently we got rejected from the median line, and it seems like we are heading once again to this 618 level at the bottom that has already been support previously. And here's when it all comes together, because if we put back everything we've seen so far, so the macro retracements as well as the connecting line, it really seems like everything seems to line up for this area here between, let's say, 52 and 57k to be the final bottom for the bear market before we get a brand new cycle to the upside. And not only that, but when you look at the end of the connecting line, it's actually predicting something like mid to end of September. And if you've watched my previous video, if not, I encourage you to do it, you will know that it falls right within our high probability timing window for this bottom of the bear market, which basically is between September and October of this year. So it really seems like everything is lining up for this place and this time to be the bottom. Now, of course, it's possible we bottom earlier or later, and we don't exactly fall within this area here, but based on history and what we've seen so far, it really seems like the most logical place for the bottom of this bear market. So I really hope you enjoyed this video until the end. Make sure to watch the other one if you haven't, and I'll see you next time. That was Acro, bye.